want to start with the loan loss provisions. They came in at 469 million euros. The estimates were for above 800 million, so much better. Do you expect this to be maintained, given the fact that Europe is going into lockdown 2.0?
Thank you very much, and very nice to be on your show. I think the first thing I wanted to say is that what we see is that the third quarter, the economic recovery has been significantly better than what we saw in Q2. And we see that in, for example, the payment activities of our domestic clients returning to more normal levels. We also see it in our commercial activities, where we have acquired an additional 200,000 new primary customers, for example. So things are definitely normalizing in Q3 compared to Q2 from what we see. Now, to your point, I think what we see in Q3 is that our non-performing loans have not really gone up during the course of this quarter. And that's why the level of loan loss provisions have dropped from 1.3 billion in Q2 to about 470 million, as you mentioned, during the course of Q3. And we are, shall we say, optimistic about our ability to handle what's coming with the second winter lockdown. And we've given guidance in the previous quarter that we do not expect that risk expenses in the second half of the year will be higher than the first. And clearly that indicates from what we see of Q3, that seems to be the case.
Tanate, good morning to you. It's Manus. You say that the distribution policy, the dividend policy at 50% payout ratio is resilient. But what we want to know is, when will the ECB let you pay the dividend for this year? And is the 2020 dividend on schedule?
Yeah. So what we have done today, Magnus, is announced two things. First, we have given a new capital target. Instead of having our capital levels at 13.5%, we have lowered the level of capital that we believe we need to run the bank over the long term to 12.5. So that's the first announcement we make. We will take our time to get to that 12.5, by the way, to make sure that we see an exit view from the current corona crisis. The second thing that we have announced is the change in our dividend policy from going from a progressive dividend policy to a 50% of resilient profit. That's the second plan that we have, and we have, during the course of Q3, reserve our profit for that dividend payment. But as you mentioned, this is really guided also by the recommendation of the ECB on dividend payment. And we expect that before the end of this year, we'll get further guidance or further recommendation from the ECB about whether they will relax this dividend ban that is currently there for a number of European banks.
And Tanate, if they don't relax the dividend ban, if that does not happen, what's your message to investors?
Well, what I think we need to do is that, and clearly the ECB is being responsible to make sure that they see clear line of sight from an uncertainty perspective for the corona in light of what we discussed about the second lockdown. Having said that, our message to our shareholders and our investors is the fact that today we sit at 15.3% core tier 1, significantly above our minimum requirement of 10.5. And we do reserve dividend for payment. So whenever that happens, we have reserved those dividends, allowing us to continue our business while at the same time providing the right returns to our shareholders.
What kind of lending is the bank doing at the moment? We saw sharp declines in the second quarter. We just came off that sort of aggressive lockdown. What does it mean for the 3 to 4% annual lending growth target that you have? Are you going to make that number? And if not, where's it going to settle in at, Tanate?
Yeah, so I think if you look at our lending numbers, we still have that ambition target of 3 to 4%. But as you would imagine, given the lockdown that we went through during the course of the Q2, that was not possible. What we do see now is new kind of resume activities, particularly in our Asian franchise and a little bit in the US. The European loan demand remains subdued for the time being. But I think as we get out of this rather deep economic GDP recession in Q2, we expect that these loan demands will start to rise in subsequent quarters. But of course, we have to take in mind the fact that we will go into a second lockdown during the course of this quarter. So it's a mixed picture about what will happen, but we are confident of seeing resume economic activity over time.